Welcome back, everyone, to Vox Markets. My name is Paul Hill, and by popular demand, I'm delighted again to be able to speak to Gervais Williams of Premier Miton, one of the UK's finest small and mid-cap investors. So welcome, Gervais.
Thank you very much, Paul.
Yeah, well, we've had a rough time on equities, particularly in the small cap arena over the last 12 months. My portfolio has taken absolute kicking. And now we've had sort of, on top of the rising inflation, interest rates, and the Ukraine Russia war, we've now got sort of lockdowns in China as well. But given the valuation readjustment, particularly in the smaller end of the market, what's your sort of outlook for equities going forward?
So effectively, what we've been seeing is really a surge in demand, driven in many cases by the furlough payments, very much required during the COVID period. But alongside that, we've actually seen a constraint in supply. And effectively, we've got excess demand, inability to supply, and that's created inflation. So we're now looking at a period when central banks have only really got one option, which is to suppress demand. That's actively increase interest rates until we get a reduction in demand, effectively a recession. And as you do that, of course, you don't just get falling sales. You often get people competing for the limited sales which are around, and that leads to margin pressure, price wars. And so I think we've got a really uncomfortable economic period coming up with a lot of downgrades and some of the most vulnerable companies, particularly private companies, potentially in danger of moving into receivership.
Well, it's quite interesting that, because certainly the market has now priced in a recession. If we get a recession, which I think is still sort of like, I mean, you know, it may be what the smart investors are thinking, but it'll be interesting to see whether the central bankers actually decide to tip us over that, you know, into it. But if we do get a recession, is it going to be mild, or is it going to be deep and protracted? I mean, that's the sort of the key.
I don't think it'll take much to get us into recession. You know, I think interest rates don't need to go much beyond 2 in the UK, for example. Certainly, I don't think they need to go beyond 3 in the US. So here we are. We've got a global economy which is very indebted. We've got a lot of consumers which are quite indebted. And effectively, raising interest rates doesn't take much to slow demand. So I don't think it'll take very long to get a recession. I think the recession itself may not be that long, because clearly, you know, we can cut interest rates again, or we can inject extra fuel. But the nightmare is, I think inflation will be more persistent. And that is a game changer. You know, we haven't had inflation pretty much for 30 years. We've got inflation now. Inflation changes everything. And I think that it's going to be very hard for global growth to come through. I think it'd be hard to find companies which are able to not just survive, but thrive in these periods. And specifically, I think, therefore, stock markets and global returns are going to be quite difficult to achieve.
Well, yeah, I mean, I think, you know, labour markets, etc., are certainly tight, but you've seen in the sort of tech sector in particular, some of the big boys like Facebook and Amazon and these kind of guys have had, I mean, they basically have hired too many people and now are starting to freeze their recruitment or even lay off. So I think we'll start seeing a more normalising of that labour force. And if that happens, then presumably that part of the service sector and will actually cool off, I would hope.
I think there will be a cooling. I absolutely agree. But I do think actually we're going to have quite a long period of actually demand for labour. Yes, it'll peak out. There will be companies going redundant. There will be businesses where unfortunately people lose their jobs. So I don't think it's going to stop from that point of view. But I do think actually that the global reliance on long distance supply routes is becoming more uncertain. People are going to be looking for more local suppliers. That obviously involves extra employment locally. You know, PPE, I think we've got 80% of our PPE from overseas. Going forward, government's not going to buy 80% from overseas in the future. It'll be 80% from the UK. So all of this generates more local jobs. So I think particularly in some of the kind of blue collar roles, I think there's going to be persistent wage inflation actually.
Yeah. Oh, okay. And now just looking at certainly some stocks on the sort of portfolio, you've got some sort of new ones and some, some IPOs, and one IPO which has been quite interesting just recently. And I know it's only a small cap, but I thought we'd talk about it because I know a lot of people are sort of quite interested in new exciting businesses. Is Ondo Insurtech, which I understand bought a company called LeapBot out of HomeServe. And it's sort of like I think it sort of helps. The technology sort of helps insurance companies reduce the water damage created by leaks in residential homes. Do you want to take us through what sort of attracted you to that one? I know it's early stage and it's only a small holding, but it's certainly an exciting growth company.
Yes, I mean, it's one of our smallest holders, but even so, the point is it's got an opportunity. And specifically, as you know, if you get not so much a major leak, but just a slight drip type leak.
I've had plenty.
In your loft or whatever, it can ultimately lead to actually quite a lot of damage and rot and all the other things which get. So the whole point about this is it actually is able to detect at your mains if you've got a leak in your house, because clearly taps are off at night, and if you're still having drip money, drip, you're seeing the water come through, then effectively it picks that up. So the opportunity is for it to work with insurance companies and actually get sponsored by insurance companies in terms of actually moving into all sorts of opportunities. So they've already got some very, very strong relationships, mainly in the Scandinavian area, actually, where they've got established customers who are taking them, giving them for free, actually, many of their customers, getting them rolled out there. They're starting to get some interest in the US and, of course, the UK. So here's a business where they've already achieved breakthrough, in our view, in terms of actually getting the visibility and getting the payback. And it's only a question of how quickly that rolls out across a number of new insurance companies.
Yeah, they do seem to have a great sort of already endorsement. I think Direct Line use them actually. So yeah, I mean, once you get more and more people of those large insurers who actually adopt the technology en masse, then presumably it becomes a sort of like a de facto standard. Now, a slightly bigger. Sorry.
I was just going to say it's very easy to put on as well. You just clip it onto your mains so it's not as though you need a workman or you need to kind of some tools. You just clip it on and you're done.
Well, I might get one myself then in that case. Save me a fortune. Now moving on to slightly bigger company, which I think sort of like serves a lot of the sort of the public sector in their digital transformation. And crikey, we need plenty of that, particularly sort of just look at the passport office and DVLA. I mean, crikey, they're really sort of struggling to get the documents out. Is TPXImpact, which is the old Panoply business that is trading at a pretty cheap valuation, actually. Do you want to take us through that one?
Yeah, the share price has peaked out. I mean, what a great business it is. It really makes a massive difference in the working conditions of a lot of people in government roles, and that's local government, particularly national government. And specifically, if you can find that it's more enjoyable to be at work, if you can find it's more satisfying to be at work, not only do you find that actually you get a better outcome, but actually it's more enjoyable for the staff and it's easier to recruit staff. So I think they can make a massive difference. I'm so impressed by some of their systems. The share price had a great run. We have actually taken considerable profits. It is a holding. It's a much smaller holding than it was previously. But what a great business. And what, as you say, what a business we really need at this stage, at a time when actually there's so much pressure on individual roles and indeed potential redundancies in the civil service. We need the staff in many of those roles to be as effective as we can possibly make them.
Yeah, I think the labour efficiency is going to be a huge driver, isn't it? Largely of sort of productivity, and I think productivity growth, as we talked about on the macro side, could well be a bit of a saviour thing if we continue to adopt a lot of the AI, digitisation, big data that drives that efficiency and personal productivity. Then I mean, it's obviously labour saving and reduces that inflation. Now, another one actually, which I've never really come across, which is a new holding, is Hercules Site Services, which I guess is probably still a fairly small sort of portfolio, given it's a new or position in the portfolio. But I think it's a tech-enabled sort of recruiter or supplier of labour into sort of building products and infrastructure, sort of like HS2. It's
just had a recent statement, actually. I mean, we've got 134 holdings, so you recognise that actually the length of the portfolio is quite long, and that's because that means that we can invest in some of these newer companies. We can invest in companies which aren't as liquid and perhaps smaller than some of the other portfolios. And here's a company which we think is just doing an amazing job. Again, what's interesting about it, a bit like TPX, is that they're actually able to offer roles in mainly sites, building sites of different types, and they give people an insight into what that site might be like. So whether it's an easy place to work, whether there's a good boss and that kind of thing. And because there's such a shortage of construction staff at the moment, we're seeing construction companies actually competing to make their sites better to work for and help companies like Hercules supply more and more staff. So it's a really well placed at a time of change to deal with a shortfall in blue collar roles, and specifically to help companies which are the most effective to actually win out against those which perhaps aren't as well managed as the best. So it's really a terrific opportunity. We're really very impressed by the management team. Interesting enough, they've also got a sideline in terms of it's sort of industrial suctions, suckers. They basically they suck out soil out of trenches.
Suction excavators.
That's right.
Yeah,
and they can and that improves efficiency, but you can also do new things with it. It's historically, when you've been putting piles and putting concrete into piles, you've tended to fill it up a bit too high just to make sure there's enough in there. But what they can do is actually, when you filled up the pile, they can then just take it down to the exact level that the pile should be without having to use those kind of jackhammers to actually break it up. And that again increases efficiency and reduces waste. Again, so they've got some really good ideas. It's a novel business. We're so pleased to get they got to market. It's been such a tough time for companies to list at this stage.
Yeah, those suction excavators, I think, are just like huge big Dysons, aren't they, for industrial rubble and stuff like that? They're great to watch. Just on that though, what's their technical or their tech enabled sort of USP on it? Is because I know they make quite a point of it's tech enabled. Is it really just online, or is there something different?
I mean, it's based on their app. So
okay.
So effectively, you can see where you are when you get there. You can check whether you've got all the right equipment. You can feedback that back, and then other people coming to the same site will see whether that particular site is well organised and providing safety equipment and all of those kinds of things. All of that means that actually you can actually find the sites which are well managed get in plentiful labour, and those which perhaps are perhaps a little bit too disorganized actually don't do very well at all. And that really helps, because if you're a labourer, you really want to make sure you go to places which are well organised. You can do a good day's work, you can get full pay for the full day, and it makes all the difference to a lot of these staff. And that's brilliant, actually, that you've got a company like that which makes it so easy for them.
Yeah. Another one which has been sort of thrown out with the bathwater is Lords Group Trading, which came out with its prelims and its outlook, and it was all in line, etc., with expectations, I think, on Tuesday. And it's sort of like is a UK buildings merchant and plumbing heating provider. Do you want to take us through that one, because the valuation is really sort of dropped and is now in it always has, but it's in value territory.
Yes, I mean, the key issue about this company, and the reason why we've backed it, is actually, again, they don't just deliver services, RMI services, building material services to many of their customers. It's quality of service, the quality of the staff engagement. It's just outstanding. So they do regular staff surveys. They get very high scores. They were very just able to hold on to staff during difficult times when there's been a shortfall of staff over the last few years, particularly in some things like truck drivers and stuff. So that's really the key issue for us, quality of staff. But if you can deliver quality service, it means you hold on to margin. If you hold on to margin, then even if you find sales peak out a little bit, or there are shortfalls, they've had a difficulty in terms of recently some of the heaters. They also involved in domestic
boilers,
heating. Yeah. So some of those boilers haven't been delivered in the volumes they would have liked, and that's one of the reasons the share price has peaked out. But generally, if you look under the bonnet of this business, it's an incredibly strong business with incredibly strong culture, and that's really the key reason why we hold it.
Yeah, I mean, they basically, I did notice their like for like over 2 years is running at twice the market. I mean, I know Travis Perkins, the market leader, did a 10% increase on 2019, but these guys, did a 10% increase on 2019, but Lords did 20%. So that says a lot about the quality of the management team. Another one which in that sort of the whole area of sort of building and bathrooms and plumbing and stuff like that is Norcros, which again has done a lot of self-help, and I think the pension is actually now under control, etc. But the business seems to be flying. It's UK and South African orientated, I think.
Absolutely. I mean, it's quite interesting because actually this has been a business around for a very long time. As you say, it's got a pension scheme, liability and such like. But what's interesting about the business is it's very, very well run. So they've kept their customers really well supplied. They've dealt with a lot of the uncertainties about logistics during the last 2 years, which has been very good. They've taken market share. They've actually made a couple of acquisitions as well, which has enhanced the business. And so they're actually continuing to fly. The business is actually really surprised, not just in terms of profit, but actually the sustainability and the growth of that profit over the last 2 years. Valuation is still not very high, bizarrely, despite the fact that it's successful. But in share price terms, because it's a business which was so overlooked 2 years ago, it still made very, very good money. And it's continuing, in our view, to have plenty of momentum for the future. We're quite excited about that business.
Yeah, I mean, when you talk about valuation, I mean, I was just looking at the share price, and last time I saw it was about sort of 234, and I make it at less than 7 times forward earnings if you integrate the the acquisition in there. So there seems to be plenty of value in that whole sector. I think it's quite interesting actually. If you sort of like, it appears as though if you buy best in class operators in these sort of like sort of building products and housing and all this sort of like areas, then you're getting great value quality businesses at rock bottom prices, and all, which is the market's overlaid this recession. It looks as though the risk reward ratio for those type of stocks when it's best of breed is really very attractive.
Yes, it's kind of interesting, isn't it? I think the UK has been pretty much overlooked for the last 30 years. As I said, the UK we're in a period of global inflation. The UK market is quite aligned to inflationary type periods. If you take the last 100 years, the UK has had lower inflation, not necessarily in the last 30, but prior to that period. And so we have a range of assets which actually are quite good during inflationary periods. That's obviously income assets. They tend to have less volatility. They're able to survive when there's a recession, and most particularly they can acquire assets from the receiver and continue to drive up income. But the other feature about the UK market, of course, is it's actually distinctive in having a vibrant universe of small and micro caps. Why is that interesting during inflationary times when there's globalized, recessions and such like? At that stage, you really do need to get involved in companies which are generating growth even without background growth. And so small and micro caps, not all of them, but some of them have the ability to continue growing even at times when world growth is absent. And some of them, again, can acquire assets, they're quoted from the receiver, and enhance that growth rate. So the nature of the UK stock market is, I think it'll be one of the best performing markets going forward, partly because it's not like many of the other stock markets. It's not full of unicorns. It's got some really strong companies, but more importantly, it's got the vibrancy and the right kind of ingredients to survive even at times when there's inflation around the world.
And in that context of sort of like small micro caps that have got sort of huge runways and secular growth trends with sort of world leading technology, Mirriad Advertising, and I think it's run by a guy called Stephen Beringer. Now, I was having a quick look at this, and I saw an RNS this morning that it basically does unique digital advertising for allows product placements into sort of content and videos after the production, and I think it does that with sort of like into programmatic advertising. And I did see the RNS today that Lexus, of all people, the car brand, had really seen a huge lift in its sort of brand recognition by using this technology. And I was just thinking, what a fabulous endorsement of a sort of like a new company.
Absolutely. I mean, the nature of it is that, old-fashioned adverts, between TV programs is becoming more and more difficult in terms of getting to your ultimate customer. And so you need to be actually not so much in separate adverts, but you need to be within the environment of which people. So if you're watching a film, for example, if you're
James Bond,
exactly, whatever, you can have, perhaps a product placed there, or possibly, as he runs across the street, you can see a sort of advert behind for whatever it is. And they put in those adverts. So there may have been no advertising board there, which they can invent, but more importantly, they could put in an advert which just looks as though it's just talking about the latest Lexus or whatever. And in that regard, actually, you get a sort of, the viewers get to see the advert even without having to worry about what happens between commercials between different parts of the film. So from that point of view, it's a really novel way of doing things. They have actually got some good buy-in, but they do need a lot more volume. At this stage, it's still quite an early stage company. It isn't a big holding for us, but most particularly, Stephen and his team really are they have a very high pedigree of delivering very substantial change in this industry in the past. And he's excited about the future, and he's been bringing in a lot of these new customers like Lexus, which, as you say, really endorse the brand. I mean, if it works for them, then hopefully it's going to work for an awful lot of other companies as well.
Oh, and I think, it's not only it's a luxury brand and synonymous, something like Lexus, but it's also big ticket as well. And so, if you start getting endorsement for those type of that credible blue chip customer and product, then it's going to work for a lot of others. So I mean, it's terrific. Another one where you were talking about sort of entrepreneurial or quality management teams. You sort of like you got Shankar Patel at Lords.
Yeah.
Also, we're moving on to sort of like Supreme, Sandy Chadal, and now again, I mean, I was just looking at the shares, and they're around about 9.5 times PER, and I know. I think they've got 4 businesses. The main one is obviously in vaping, but they've got batteries and lighting, which is pretty stable. And I think also their sports and nutrition side is doing well. It's just having a sort of, inflation, input cost inflation issues. But it seems to, again, another baby in the bathwater stock.
Yes, I mean, what's interesting is he started off with batteries, and he's got the Duracell batteries and such like, which he used in the UK. But that gave him the access to the market, and then he's put down other products down. Of course, 88 Vape was a huge success, very low cost. It goes a lot through corner shops. It does go through some of the supermarkets as well. But again, it's low cost. It's manufactured in Manchester, actually, so local manufacture. And so he's kept the cost right down and been able to take the market. And as you say, he's moved into other areas, not just lighting, but specifically mainly sort of vitamins and that kind of thing. And there's an area where actually the margins are enormous. So he says he can supply a whole year of vitamins for only £5 in some cases. And again, he's using recycled packaging, local manufacture again. These are terrific opportunities, because really he's providing real value at a very attractive price. So again, very entrepreneurial, spot on there, but also very cash orientated. The kind of companies we want aren't companies just which are going to succeed in taking sales. What they need to do is generate surplus cash, because that gives them so much option. They can invest in their business, they can pay some dividends. Actually, Supreme pays a very good dividend. On top of that, they can actually, if they want to, buy back some shares if they're too cheap. And in many cases, they make acquisitions. As I say, if we get into recession, they may be able to make acquisitions at distressed levels. These are viable businesses over-levered, unfortunately, which go into receivership. And because they're over-levered, they come out of receivership debt-free. The team themselves has done all that work to get into the market position they're in, and you can get a big cash payback on that. So we think it's going to be a much more significant feature of growth going forward, not so much world growth, but by making acquisitions from receivership.
And I think if you've got that sort of like passionate entrepreneur who's driving the actual business, it not only sort of like help directs the business in terms of M&A and strategy, but also attracts very good quality people to the same business, because they want to work for these kind of guys and learn from it as much as they do part of the actual part of the journey. Now, moving on to sort of some reopening stocks, one which is actually quite interesting, HostelWorld, which I think is an online travel agent for all things sort of hostels around the world. Now, it's quite interesting, actually, because my daughter's 24 and 25, my eldest, I mean, has been locked out for 2 years, and she's going off to Australia. So, it seems as though there's now a major trend of sort of like, young adults who have not been able, particularly university, have not been able to sort of like go traveling. And now that door is opening, and they're just thinking, crikey, let's do it, And you'd have thought these would be a major beneficiary. Admittedly, it's quite competitive in terms of, if you have other like Hotel.com and Expedia, but they have a well-recognized brand, I would have thought.
Yes, I mean, it's been a tough time, and quite a few of their competitors have actually died over the last few years. So, volumes have been very low. They've survived partly because they're PLC, partly because they've got a very strong balance sheet. And during the last couple of years, actually, they've used quite a lot of their time to actually improve the offering. So the offering was already very strong. The reason we supported the company originally, they had a strong offering. But most particularly what they've done is they've actually made it easier now, before you go, to kind of to find out who's also in the same hostel at the same time. And that allows you to link up, and you can go to various events together, or you can just find find that actually it's quite a busy hostel, and you get quite excited ahead of time, and then you can follow people up afterwards, perhaps. So the nature of it is actually it's quite a social aspect rather than just the hostel itself. The hostel itself, of course, gets a visibility of its customers coming. It obviously gets the ability to you can go from one hostel to another quite easily. You can change your plans very easily. It's very flexible. It's all on the app, as you imagine. And so the nature of it is actually, I think it's one of the best hostel apps in the world, possibly the best hostel app in the world. And that's a great thing to have developed. And now, as you say, with reopening, we're going to see much larger volumes of usage. And that will take it from a loss into a profit very quickly. Again, as I say, it has a relatively strong balance sheet. So you can see the share price recovering considerably. Actually, what's interesting, it's recovered rather less than perhaps many of the more mainstream holiday companies like Jet2.
Yeah, and I mean, it looks like a good value, something to have a look for investors. And if they recover back to sort of 2019 levels pre-pandemic, then the valuation does look extremely cheap. Because you should get a lot of operational gearing coming through, I would have thought.
Yeah, absolutely.
Yeah, and another couple on the sort of the reopening. Live Company, which does sort of like festivals and. I think it also does one of the Formula E races out in South Africa and stuff like that. And again, I mean, looking at the sort of the trading updates, I mean, it's a much bigger business, but Live Nation out in the States and the whole of it's sort of like concerts and that sort of stuff are roaring. So I'd have thought this one, admittedly, is much smaller company. It's only 15 million market cap, but again, it's in the right domain where people want to go out and enjoy themselves.
Yes, I mean, it's actually had a difficult time for the last couple of years. Its principal business has been in a company called Brick Live, which is a kind of range of different fun events, particularly for children to go and play with Lego bricks and make things and all the rest of it. And they have quite a lot of Lego animals, which they have at these events, but they also sort of rent out to zoos and things. Because often when you get to the zoo, you can't see the animal, so it's nice to look at a Lego animal instead. But the main thing is, actually, they've had a very tough time. So he's been wondering what to do, and he's been sort of following up. He did a Saatchi an exhibition for some of the K-pop bands in the Saatchi gallery, which got the relationship. But thereafter, he used that relationship then to set up a K-pop event in Frankfurt, where he did an evening. And K-pop, for those people who don't know it so well, is quite a safe kind of music event, really, compared with some of the sort of rock and roll stuff. But most particularly, he got so overwhelmed with demand. In fact, they've done 2 nights. They've completed now. It was a couple of weekends ago at Frankfurt. It turned out to be an amazing event in terms of interest and volumes and all the other things they sell with it, all the different merchandise and stuff. But what's been interesting about it now is because he's done that and he's got the bands in a kind of quite a nice structure with sort of 4 or 5 bands, effectively he's been able now to start talking to other venues around the world. And so he expects to roll it out, this K-pop thing, in different venues. And he's also rebooked again for next year at Frankfurt for a repeat performance. So it's kind of amazing. That's proper entrepreneurialism again. Really not very easy during the last few years to keep the business going, but actually developed a completely new area of operations just by working with people and developing relationships. Very impressive.
Yeah, and it's quite interesting. We're just going full circle back to sort of like, what you were talking about, the cost of living crisis and the consumer, etc. It still seems as though, they have built up, a large part of the consumers, so, of the population, 60-70% who have been in work have built up a lot of disposable income, and they're going to spend that on holidays and they're going to spend it on live events. I mean, you just cannot get tickets for sort of like, Nedworth or the live rock events or, anything of that sort of quality, sort of events, because people want to go out and enjoy themselves and are prepared to transfer some of the other spend they did on sofas into sort of like, experiences. One company that came out with a trading update this morning is Hostmore, which owns TGI Fridays, and I know it's sort of like returning to sort of try and get back to 2019 levels, but it did talk about it's seeing a softening just recently because sort of like consumers. You want to take us through that? I mean, the shares I think they'd already been sold off because they were very, very cheap anyway, sort of anticipating sort of like this quieter patch, but it doesn't seem to have detracted from the longer term growth trend.
I think, I mean, it obviously operates under the Fridays name as opposed to TGI Fridays, which is different. But what's interesting about it is actually, I think as a foundation, there's very few other venues which are opening as much as they are, and they've got more opportunities. As it happens, that's held by other portfolios. It's not held by my own portfolios, it's held by other portfolios here at Premier Miton. But again, there are opportunities for some of these quoted companies to actually invest at a faster rate, take advantage of the weakness of others, and actually come through the bottom of the recession and with a stronger business and more upside potential as a result of that.
Yeah. One just on that one, a larger company that just raised money, or is right in the process actually of raising money, is Accysy Technologies, 300 million euro business. It's actually been around for quite some time, but it's got its own patented technology I think it's to convert softwoods into hardwoods, and therefore has been, sort of environmentally friendly, and has been expanding its capacity, its factory footprint for that. Accoya, which is the hardwood, I think is, and then Tricoya. I can't remember which part that one is, but it's been increasing the production capacity across the world. Do you want to take us through that one? Because it seems now to be really getting scale.
Yes, what's interesting about this is really they have been in an R&D sort of period for the last few years. They've got a big plant in Arnhem, which has produced a lot of these products. And as you say, it's converting softwood into very long-lasting wood. You can put it in the ground; it won't rot so quickly, etc. They've got a new plant coming on in Hull. It's been delayed, but it is coming on stream this year, and that's very good news. And you can actually, the great advantage of this stuff isn't just that it's able to be made and it lasts a long time. You can have it in colours and different finishes and all the rest of it, and it's very robust. The real advantage is now that the technology is proven and they can't supply enough at the moment, is to scale it up. And so they've done a deal with Eastman, which is the old Eastman Kodak business. They used to make in the US a lot of cigarette tips, and the chemical they use to make cigarette filters is actually very similar to the product which they use to actually make softwood into hardwood. And so actually they're going to use the Eastman sites. And there's 10 or 20, I don't know what the exact number is, it's quite a number in the US, where Eastman are going to provide their chemical facility. They'll provide the technology along with the ability to turn softwood into hardwood, and they will then supply a very substantial volume into the US market. Now, what's interesting about that joint venture, which it is a joint venture, is that they have 60% and Eastman have 40%. It's not 50-50, they've got the majority, and that just says the quality of their product and the ability of using what were potentially redundant chemical plants and make them into much more productive facilities going forward. Amazing stuff. As you say, over a 3 or 5 year period, this could really drive sales in a very substantial way. They needed a bit of extra cash to keep finish off the whole plant and get that into production. Not a problem. The upside, longer term, looks very exciting.
And timber frame homes in North America are huge, aren't they? When you actually go out there, because it's Absolutely. Yeah, I mean, we've always built with bricks, but frankly, America has always adopted timber, hasn't it, most of the time? Other than maybe Florida in the Hurricane Alley.
Well, there's a bit of that. I mean, I think also there's great heritage about sort of wooden houses and stuff. Obviously they remember the original settlers and all the rest of it, and it's just a different culture. I mean, actually, interesting enough, we have quite a lot of timber framed houses in the UK, even if they've got bricks around the outside. So actually, we use quite a lot of timber ourselves. It just doesn't look like we do. Oh,
okay. Now, another one which is sort of like a long runway ahead that's still early doors, but listed last year, Saietta, and it sort of like makes patented axial flux electric motors, and it's really, I mean, it's got like, hugely an entrepreneurial team. I mean, I've always thought, because we've had a lot of M&A and consolidation, that, it would be bought out, but actually it seems to be buying out, and its M&A strategy is as good as its organic growth. Do you want to take us through this one? Because it's really seems to have accelerated its whole commercialization strategy.
Yes, I mean, the whole point is about its axial motors is they're very good in sort of, particularly in mopeds. And so there's a real problem with smog in many of the Asian cities, India particularly. And so they're working with all 7 of the different Indian sort of moped manufacturers to actually bring their product to market. And as they swap out, diesel motors or petrol motors for electric motors, of course, you reduce the smog. What's been interesting is they've had to really scale up really fast. And as you say, they've made 2 acquisitions. They've got a site now near near Silverstone, which is the old racetrack. But also they've moved into the north as well with a former business which used to make motors there, and they're now going to bring that into production.
Yeah, Sunderland, isn't it? Sunderland.
That's right. But what I think is even more impressive is the acquisition they've made, which is a Dutch business. So this was a Dutch business which was actually originally acquired by Evergrande, which is the Chinese business, which is a property which is getting into financial trouble. And as they got into financial trouble, this business, which they paid, a short 50 million euros for, and they put some cash in subsequently. What's interesting about it is actually the staff at that business, which is involved in bus chassis and inverters, as well as electric motors, has quite an established business in its own right. They were starting to lose staff, and particularly to companies like Saietta. So what's interesting is they've said, look, if we need to sell a business, let's do a deal. And Saietta will say, well, we could do a deal, but we don't really need you because we just take the staff. Thank you very much. And they said, no, don't do that. So there was a toing and froing, a business which they probably put, over 50 million euros in. In the end, they ended up selling to Saietta for 2 million euros. What an amazing opportunity. Making acquisitions from distressed sellers at very low valuations doesn't half improve your market position going forward. So they're not just in electric motors now, they're also involved in bus chassis across the continent. Very, very impressive.
Yeah, and I think it's added real sort of rocket fuel to its growth trajectory, because I think they did about just under, I think it was about £3.6 million turnover last year, but they're sort of like on track to do over 20 million of this year. So it just shows you that it's hugely accelerated that whole commercialization strategy, which when you're coming to to adopt and to make your technology the de facto standard is really crucial, that you act with speed, isn't it, I guess?
Absolutely. Vic Witcher actually happens to be a racing driver, the chap who runs it. But I think what's interesting about racing drivers is they you might say them fast moving, but actually they're very careful about risk. If you mess up on risk, you kill yourself. So basically, I think he's very sensitive in terms of taking too much risk. He is moving fast, but he's very careful about risk as well.
Yeah. Another one which is at early stage is Blackbird Video, which is sort of like a new sort of cloud native, or it's cloud-based video editing, and I think we actually use it at Vox, so it goes down well. But it's got a lot of competition. What's sort of like the key USPs of Blackbird?
So this was originally forbidden technologies. You may remember it from the past. This is the same technology. The key issue about their technology, which was actually, they've been working on really for more than 10 years now, is that it has very little bandwidth. You can put an awful lot of video through without actually using a lot of bandwidth. And that's great news, because actually video itself, as you know, is a very wide bandwidth factor. Yeah. And if you're trying to, perhaps update, past cuttings, and you want them to actually edit them and bring them into a position where they can be viewed very, very quickly, you really want to do it on a low cost basis. And if you can do it with less bandwidth, of course, you reduce the carbon footprint as well. So it's very quick, it's very cheap, it's very accurate. I think it's, from my own view, it's one of the leaders in the industry, actually. It's only a question of how quickly it's adopted by some of the others. And it's up against the big names, which obviously means it's a little harder to get through. But they are getting some very impressive joint ventures with all sorts of companies. And they are speaking to some of the largest companies in the world on this kind of thing. Clearly, it takes a while to get those companies landed. But what I've been impressed by is the confidence, the early stages of success they've already had. And, in my view, the quality of the product is such that it could well be one of the mainstream video editing sites in the world in due course. But we'll have to see. We don't know that. It's the ambition of the business.
Yeah, compression technology is everything, isn't it, when it comes to sort of like videos? Because you can, if you're not careful, you get sort of like a gigabyte sort of file, and if you have a sort of a dodgy bit of bandwidth, then it doesn't go through properly. So yeah, absolutely crucial. Now, a slightly bigger company is Avacta, which has been, the share price has been up and down, and I think it's just over £1 at the moment. But they've got a lot of major sort of like value inflection points coming. Not least, obviously, the precision chemotherapy drug, the prodoxorubicin, that is hopefully having safety data sometime released over the summer. And then you've got that, and then you've got lots of others like your Affimer. So do you want to take us through the update on Avacta?
So Affimers are a bit like antibodies. They're smaller, they're more robust. And so they can be used in place of antibodies in certain areas. I mean, the reason we invested in this company, because it's therapeutics, as you say. You can use these AFMAs to actually identify cancers in the body, and then bring the drugs alongside and only release the drugs when they're right next to the cancers. And it's that ability to release them next to the actual cancer, which means actually a lot of the problems with the toxicity of chemotherapy is it means you can only have a limited number of cycles. If you reduce the toxicity by just releasing the chemo drugs very close to the sites at which they need to act, is you get much less toxicity in the body, which means you can move to a number of different cycles, perhaps many more cycles than you could do previously. So you've got a much greater chance of treating the cancer and surviving without the adverse side effects. It's making great progress. It's in man now. We've got some early stage phase 1 trials already active at the moment. We haven't heard at this stage how successful they've been. What we have heard is that there haven't been any reasons to stop it, and that in itself, bizarrely, an absence of news is quite good news in this case. So we're quite upbeat about the potential. I think the reason the share price has been up and down was subsequent to us investing, and over the last 2 or 3 years, they had the opportunity of bringing AFMAs and doing some lateral flow tests, and they were making some good progress. But in the end, they haven't broken through in that market, and they've had to retreat and come back with some newer products. No problem really. But obviously that did drive the share price to a very high level at one stage. And of course, as that has fallen away in the short term, we've seen the share price come back to reflect more the underlying therapeutics, which, as I say, is the core business in the first place. And potentially, again, if we get to the finishing post in terms of phase 3, it's a long way from phase 1, then these things could be worth very, very substantial sums. And they've got incredibly, sort of substantial partners in the Far East and America, which is again reassuring, because it's the quality of the partners again which gives us the reassurance that the quality of the technology is as strong as we think it is.
Yeah, I think that the prodoxorubicin, if they can, I mean, they're doing dose escalation at the moment, which says everything that they're not seeing any detrimental safety information. And this is over $50 billion chemotherapy market. So it's a huge runway. And on that, with the quality of the partners, I did see some of the RNSs coming through. I think it was with the Daewon Pharmaceuticals out in the Far East, that joint venture, which is they're putting into AFMAs, into gene editing, new therapies, and the AFMAs essentially are injected into the blood draw, or the actual cells that are taken from the patient, along with the gene therapy treatment, and then put back into the patient, and reduce the AFMAs actually act as almost like a therapy, reducing the side effects of the gene editing. So really leading technology. Another one with really leading technology. We've had got 4 leading technologies. Really, the final one is Trufin. Now, I've spoken to a lot of extremely astute fund managers like yourself, and they all own it. And when they do a sum of the parts on this business, which has got a gaming side, play stack, and it's got sort of like early payment invoicing and lending as a service with Santago and people like that, it seems to be a huge disconnect between the share price and the underlying sum of the parts. What's your sort of thoughts on Trufin?
Yeah, I mean, I'm very impressed by the management team here. As you say, they've got 4 parts of the business. What's interesting is really they've been taking businesses which haven't worked for other people, in some cases buying them for £1. So Targa they bought for £1. This is a business which is particularly involved in helping businesses pay bills. So this is particularly in invoicing, invoice discounting. And so, if you've got an invoice and you need the cash immediately, they will give you cash now, and they'll collect the invoice in due time. But what's interesting about this is they moved into the market with this invoicing discounting business. And most particularly, they found it was very effective. And then they started discussing it with larger companies, most particularly Lloyd's. And with the initial conversation with Lloyd's is, because they've got a number of different systems at its bank, which has a lot of old technology in it, that they were saying, well, you probably need to have an overview to understand the risks of all your different positions in terms of lending money through by invoice discounting. And so they were bringing it in really as a risk system to start with. But increasingly, as the conversations continued, they didn't just want to use it as their system. They said, hang on a minute, this is so much more efficient than all the different systems we've got internally. Why don't we just put it in as the main body of the system to authorize the lending and manage the lending, as well as have the risk system? And so it's taken a long time. Of course, they need to check and they need to be very confident about it in terms of the Lloyd's business. But what's interesting now is the Lloyd's business itself has actually standardized their entire company on the Statago software. What an amazing thing to buy for £1 and then get it into those kind of companies. And over the next, I thought it's exclusive with Lloyd's for 12 months. I think it's very likely that other banks begin to say, well, that's very interesting. If it works for Lloyd's, maybe it'll work for us. And so you're going to see this opportunity roll out. So that's just one part of their business. They've got 3 others. Of course, this is the more developed part of the business, but the other businesses are also very exciting. Again, sensationally entrepreneurial management team, managing downside risk, putting cash to work, turning heads and getting significant cash payback. That's the ultimate in terms of generating return, especially during unsettled markets when we aren't sure that share prices will just politely rise as they have in the last 30 years.
Just on that, with sort of like, the overall market, in terms of finding a bottom, what's been quite interesting actually is that just recently in the small caps, because the small caps started selling off 12 months ago, way ahead of all, obviously, the big FANG stocks and this sort of stuff. And it happened the same in the great financial crisis, that small caps sort of like suffered really towards the back end of 2007, whereas the FTSE only bottomed, I think it was March 2009. Are we actually seeing a sort of like a bottoming process for small and micro? Because I did notice, I mean, I've got one stock and it's only one, which was, I've lost a bit of money, which is also Purple Bricks. And it came out with a profit warning yesterday. The shares stayed fairly flat, went down very marginally. And I was just looking at sort of like, we've just talked about Hostmore, which has again come out with a profit warning. And it's only down 10%. And that says to me a lot that the market's priced in such bad news beforehand that actually the risk reward profile is looking reasonably attractive. That even in tougher conditions, we could be reaching that bottoming process in small and micro caps before obviously the big boys sort of like reach theirs.
Yes, it is interesting, wasn't it? And if you take the sort of March 2020 period, all stocks obviously suffered very badly in that period. What was interesting wasn't so much that small caps recovered, but they recovered so much more substantially than most other parts of the market and went on to produce such strong returns. Clearly, there was a little bit of profit taking, which went on even before the market turned down this year. And that's been a feature. But I think what's interesting about this is actually it could be a pattern which we're going to see going forward. In other words, it's going to be led by the fact that actually companies generating surplus cash are going to be advantageous. Companies with listings can acquire assets from receiver, as I said earlier, and that can enhance returns. So I think what's going to be interesting isn't so much about the opportunity for the UK to outperform. I think the UK market will outperform most other international markets, partly because of its involvement in equity income funds and the difference between that and many of the sort of unicorn type holdings which are in many other portfolios. We're going to get a rebalancing towards that institutionally. But I think we're also going to get renewed interest by institutions in small and micro caps, not mid, small and micro. Now you might say, hang on a minute, that's an awfully long way to go. And I do accept it is, but even drip, 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 small amounts coming into one of the few areas which I think can grow when the world's not growing, one of the few areas which actually can thrive in some cases with option value where you can make 3 and 5 times your money is going to become very exciting. So from that point of view, I don't think the UK sector is likely to outperform just versus the UK mainstream market. I think the UK market will outperform versus most international markets. If I'm right, then actually small micro caps could become one of the best performing markets in the world in the next 10 or 20 years. That's an extraordinary opportunity, if I'm right. It does rely, of course, on inflation perhaps being a bit more persistent, we all think, and a real sort of fundamental change in the pattern we've seen in markets in the last 30 years.
Yeah, well, I hope you. I mean, I think you're right as well. So it'll be really interesting, and it's a great place to invest as well because there's some exciting companies that you can really back and. With really sort of innovative technology that can move the dial for the world, the population, and lots of people. So
I think there's a second feature there as well, which is, I mean, here, we are investing, we are giving these companies more working capital and more risk capital to invest at a time of uncertainty. The great advantage about risk capital is it's not debt. If you don't succeed in the first sort of time period you're allocating, it doesn't mean you go bust. You've actually still got the chance of succeeding thereafter. So that's the first thing. Now, much more importantly as well, it's actually socially useful in that regard. If you're allocating capital to these businesses, many of these are local businesses. They generated skilled employment. They generate local skilled employment. We're going to need more jobs going forward. They also generate productivity improvement. Why is that important? Because you can pay, your pay rates can actually increase beyond inflation. Goodness, do we need a bit of that? And of course, the third thing is that these are companies which pay local taxes. They're not sophisticated. They're not all paying it through Cayman Islands or the rest of it. And that's good for the government. So ultimately, politicians, and this is true of either the left or the right, are going to be very, very supportive of the UK market, which actually has this vibrant universe of small and micro caps. So I think they could be very exciting, not just in terms of the investment and the opportunities for winning, and companies themselves often generating returns which are much ahead of many other areas. But on top of that, I think you actually can sort of feel good about the fact that actually you're helping other people in the electorate to actually survive what may be a very uncomfortable period.
Well, that's a terrific point, to optimistic note to end. So thanks again, Gervais, for your time, and look forward in chatting in 6 months, going forward. If there's anybody who wants to invest in the funds, where is it best to sort of like, is just just go on the website or how?
That's right. I mean, you probably have to go through Funds Supermarket to actually buy any of the funds, but actually the website itself, Premier Miton Investors, will actually give you all the details, and it's worth looking at all the details because we try quite hard to put not just the details, the fact sheets, but also little videos and other things which give you a better idea of what we're trying to achieve and the risk we have to take on your behalf to try and achieve the results we'd like to deliver.
Brilliant. Well, thanks for your time, Gervais, and as I say, look forward to speaking to you again in 6 months' time.
Thank you very much, Paul. I really enjoyed it.